Hi, everybody. This is Dan Sheridan. I'm going to talk briefly about at least my tentative plan for this coming week, Monday, March 18th. We take a quick look in the SPX. Generally range bound last week, but some movement. This coming week, what are we expecting? We closed at 51.20 on Friday. What's the expected range? Expected move for the week, the one standard deviation move. We're looking for SPX to be in this window of 50, 50, 40, and 5,200. Good guideline for range-bound traders. I think 5 of the last 6 weeks we've been in the expected range. The only one not was when the NVIDIA earnings came out. So keep in mind this 50, 40 to 5,200. Now, what else? Wednesday's the big news event, which would be the Fed. Comes out 2 Eastern. The Fed announcement on interest rates. Looks like they're not expecting to do anything right now. And then at 2:30 Eastern, Powell will come out with a press conference. So you want to make sure, within the first hour or two on Wednesday, that your deltas for range-bound traders are relatively neutral, that you have some room if there's a 30 or 40 point SPX scramble once the earnings come out. All right, real quick, what trades am I looking to put on next weekend? And if I want to put a little smaller size due to, if you're concerned about the Fed announcement, that's fine, then your normal size. Number one, we're going to go 0-day to a 26-day trade. I'm looking at maybe a 0-day iron condor strategy. You can see here, March 18th expiration tomorrow. The expected move will be around 30 points or a little bit less. Looking to get, maybe about a 10 delta for the short call and put. Right now it says I can go 40 points to the short strike of both sides. Tomorrow maybe 30 points. So somewhere, whatever a 10 delta would get me set up for, and you get somewhere between a buck and a half credit in the morning. That'd be a 0-day. Then if I go to a 4-day combo trade, a calendar on the downside, a butterfly on the upside, let me tweak it just a little bit. The graph a little bit better. 51, 60, give me a second. 25, boom. Like that. Let's see. 51. Let's see. I might come down just a little bit more. Okay. So this would be a combo strategy, a calendar on the put side, a butterfly on the upside. The expiration would be Friday, 4 days. So you get pretty good room here. You still get a good 40 points or more over for a trade that I'm looking to be in about 2 days. So this would be a combo strategy, a calendar on the downside, butterfly about 25 wide on the upside. Next thing would be an 11-day calendar trade by April 1st, so March 28th. I'm looking to be wherever the market is, maybe 20 points under. So if we're 51.17 roughly, we closed it. Maybe I'd set it at 5,100. It's still a little bit long deltas. And just because the market's been running up, I'd rather, I can kind of get a little more protection on the downside, but my Greeks are still pretty neutral. And then the last trade for the week, or that I will be looking at, and I might spread these trades over 2 or 3 days, would be a butterfly trade. This would be an April 12th. So this would be 26 days out today, 25 days tomorrow. And this would be a 70 on the downside, a call butterfly, 60 on the upside. You can see the deltas are pretty neutral, pretty flat T+0 curve. So I'm diversifying my duration on my trades, diversifying my strategies, some long vega, some short vega. I'm putting them on different days. So these are the things I'm going to be looking at this week. And good luck trading, everybody. Thank you.